to turn it over to Juan with Monex. Your company has been right in the middle of all of this because the money is flowing. Right? I think Ron Fearson mentioned, capital move and people move. You're moving money, right? You're helping companies pay their suppliers or change their, relocate their manufacturing plants. Juan, can you explain a little bit more about what you do and what you've been seeing from the business side, how the money is flowing in or out? You do a lot with Mexico, my understanding, and also I hear that your last 3 months were not bad.
It's been a roller coaster type year where there are many things that are now concerns for trade that weren't before, and I think I'll start by saying that it's almost a shame that California does not have its own currency, right? But we'll get to that later. I think one of the things that, obviously we're in the midst of commerce, right? And it's a very competitive market, but it's never been this wild. What's the thing that ultimately businesses want? Markets ultimately are looking for a source of reliability and stability. And when the very financial system that runs trade is the US dollar, everybody looks for the United States for not only policy but guidance, and to be able to say, I have long-term planning capability because there is a source and a core center that we can believe in. That's ultimately dramatically changing, right? And I know I'm from DC and I don't want to get political, even though that's second nature, but what it is happening is we have to be concerned about de-dollarization because the financial environment and foreign exchange, where it ultimately is we have currencies and what are foreign exchange currencies. Well, why do we have that world? Ultimately, these commodities, such as the euro, the Saudi Arabia riyal, the Mexican peso, what they are is tools for us to be able to judge the management of countries. That's the reason why I mentioned California, right? Because if California is doing such an outstanding job, it would be great to be able to invest in Californian type bonds or in California, right? That's one of the things that is starting to hit with all of the friction that we're seeing between federal and state and business interests as well. Like I said, ultimately, at the very base and at the very core center, we want a US dollar that you can at least plan and see some sort of patterns. But lately, for me to be able to give you a one-year outlook on euro, it's become incredibly difficult. I don't know if we are going to lower tariffs because they're an ally supposedly. I'm not sure if they're going to hit us back with retaliation. I'm not sure if Italian furniture makers or Italian furniture importers are going to start looking at perhaps cheaper sources. So that's the type of thing that I absolutely am in the very middle of. But de-dollarization is going to affect all of us because it affects the purchasing power that we have. And for anybody that is in business, right, ultimately, the great thing about the US dollar is that you can always negotiate from a point of dominance when you're anywhere in the United States. You're saying, I can pay you in US dollars, and they're probably elated across the world. Not anymore. What we are ultimately seeing is a change towards what we call, in the foreign exchange world, you have the ask and the bid side, right? So a lot of it is asking for currencies because I'm settling in US dollars. So we sell a lot of currencies, but we've ultimately seen a lot of repatriation. And why? Because, do we really want to just force our business partners and our overseas people to get paid in US dollars when the fluctuation and the volatility or perhaps the deterioration, I mean, we've seen what, I don't have the statistics, I didn't bring my notes, but it's about a 6%, let's be very accurate counting today's dramatic movements post the Fed, it's about a 6.5% dollar weakening in comparison to its major peers. This is according to the Bloomberg Dollar Spot Index. So what is ultimately helping me and helping California and helping the United States is personal consumption. So what we are going to be watching out for in the next couple of months is the trends in personal consumption, and the American consumer can continue to be the backbone of the American economy. Ultimately, it's going to be difficult because we have to worry about stagflation, right? Now, stagflation, for some of you guys that may not be familiar with stagflation, right? We're talking about stagnant growth accompanied by higher inflation and higher prices. So it's a really crappy situation, right? Because then ultimately you're just paying more for getting less. And one thing with California that I've heard throughout the event today is being concerned about the supply chain, because California is 40% of Chinese imports come through here. So while we do not directly deal with Chinese yuan as much, we are seeing a lot of movement for CNH, which is this offshore for basically Chinese CNH is the Chinese yuan that you can get out of Hong Kong, along with the Hong Kong dollar. So what we're ultimately dealing with the most, as you guys are, is people looking for alternatives and looking for social reliability, which has become incredibly difficult.
Excellent, excellent. No, your outlooks are great. I know your material, but from your experience for the last couple of months, considering January onward, shed a light on the trends that you've seen with your key markets, either Mexico and U.S. or U.S. and European Union. What are the key trends that you've seen in terms of the behavior for those clients?
One of them is working. So one of the things, of course, our bread and butter being Mexico. The Mexican peso has surprised us because, considering the fact that there was, I believe that the U.S. dollar was actually going to improve dramatically. The Mexican peso has improved because, and I'll add a few factors. One of them is economics. And there's still no contractionary pressures, no recessionary pressures developing in Mexico, so we're very happy for that. And part of the geopolitical reason for that is we are very thankful for President Claudia Sheinbaum. Claudia Sheinbaum came from the AMLO school of how to deal with the first Trump term. And I think she has been phenomenal in doing the one thing that is the most important for us, which is holding up the USMCA. So that's really one of the things that I would say for California and for Los Angeles. It's a part where we truly are really immersed in, and we help in managing that risk. And I would say this about foreign exchange, which I was explaining to a few people I had conversation with. But ultimately, you want stability in business, so what foreign exchange allows, what we do is we navigate through the world of protecting yourself. You want to protect yourself from the markets destroying you, right? But what we're now seeing as a major trend is the other P in foreign exchange, which is participation. People are looking at the volatility, the wild roller coaster ride, the fact that at Deutsche Bank and other banks, which were wrong, we had the euro dropping to perhaps parity at some point, but the investment by Germany, the fact that they're opening up their coffers, is making the euro incredibly strong. It's the strongest that it's been. So these trends are happening much faster than they've ever been, and that's why a company like us in our guidance is much needed, because we kind of all as a globalized community need to hold each other's hands.
Excellent. No, this is great. Emily, I want to go to you and then Consul General for, based on all this discussion and on the previous panels, Dr.